Welcome back to the channel, guys. With Friday's session closing, the market has been steadily falling for the past 4 weeks. Although we saw a strong rally on Friday, it seemed more like a short covering rally to me. Until we get a clear picture of how the tariffs will play out under President Trump, I believe the market will continue to be in this state of uncertainty. On the inflation front, while the most recent numbers have shown a slight ease, experts believe that rate cuts in 2025 may not be as smooth as initially expected. The next Fed meeting is scheduled for the 18th and 19th of March, and it will be interesting to see how things unfold. Despite the broader market being in a downtrend for about a month, some stocks have been outperforming and showing strong rallies. So, in today's video, we'll go through 5 stocks that are standing out. Let's get started with the first one on the list. Starting with the first company, we have Protagonist Therapeutics with the ticker symbol PTGX. I have pulled up the chart on a weekly time frame, and you can clearly see that the stock has given us a horizontal breakout in the past week. Let me walk you through some key points. The stock previously made a high of around $50 back in August 2021, and since then, it has been trading below this level. For nearly 3.5 years, it remained under this resistance, but last week it finally broke out. If we look at the volume, there's a significant uptick that led to the breakout, which is a strong confirmation signal. Another key factor to note is that the stock is trading well above its 50-day exponential moving average, EMA, which is shown in white, and its 200-day EMA, which is in yellow. This is a very positive technical sign. If you look closely, you'll also notice that the stock had been taking support from its 50-day EMA for a long time before bouncing higher. In a falling market, this kind of strength is a good sign. However, I don't know whether this momentum will continue, and I leave the further analysis up to you. My job is to highlight stocks that are outperforming the market, not to predict future price action. Keep PTGX on your radar and see if it aligns with your trading strategy. PTGX operates in the healthcare sector, focusing on peptide-based therapeutic drugs for unmet medical needs. Founded in 2006 by Mark L. Smythe, the company is headquartered in Newark, California. It has a market cap of $3.36 billion, generating revenue of $434.43 million, and net income of $275.19 million, with a profit margin of 63.34%. The company has a PE ratio of 13.02 and an EPS of $4.21. The stock offers no dividend yield. The next stock, with a very similar structure, is CME Group Inc., which has also given us a horizontal breakout on the weekly time frame. I have the chart pulled up, so let's go through some key points. The stock made a high of approximately $257 back in February 2022, and for nearly 3 years it traded below this level. Last week, it finally broke out, signaling renewed momentum. What's interesting is that while the broader market has been falling over the past few weeks, this stock has been consistently gaining for the past 9 weeks. This relative strength could suggest that the breakout has room for further upside. Looking at the moving averages, it is well above both the 50-day EMA and the 200-day EMA, which further confirms a strong technical setup. Since this stock is showing a breakout and sustained momentum, it might be worth adding to your watch list. If it fits your trading style and risk tolerance, you can consider a trade in it after doing your own research. Keep an eye on it, and let's see how it plays out in the coming weeks. CME operates in the financial sector, offering futures, options, and clearing services across asset classes, including interest rates, equity indexes, and commodities, through exchanges like CME, CBOT, NYMEX, and COMEX. Headquartered in Chicago, Illinois, the company has a market cap of $93.222 billion, generating revenue of $6.13 billion and net income of $3.48 billion, with a profit margin of 56.79%. It has a PE ratio of 26.74 and an EPS of $9.67. The stock offers a dividend yield of 4.06%. Next up, we have Fortuna Mining Corp with the ticker symbol FSM, which has also given a horizontal breakout. I have pulled up the chart on the daily time frame. Let's go through the key points. The stock made a high of approximately $5.50 back in July 2024, and since then, it has attempted to break through this level twice, once in October 2024 and then again in February 2025, but was unsuccessful both times. However, in the last trading session on Friday, the stock finally gave a breakout. If you look closely, the upward momentum started around March 4th, and since then, the stock has been moving up consistently. In percentage terms, it has already gained approximately 37%. So, just a word of caution. After such a strong rally in a short period, the stock could see some pullback. That being said, if the upside momentum continues, the next significant resistance level is around $6.30, which is approximately 12% above the current market price. If the rally sustains, this could be a potential rejection level, so keep an eye on it. Unlike the previous two stocks, which were on the weekly time frame with a longer duration before breaking out, FSM has achieved this breakout in roughly 8 months. Let's see how this stock performs in the coming weeks. FSM operates in the basic materials sector, focusing on precious and base metal mining in Latin America. The company is headquartered in Vancouver, Canada. It has a market cap of $1.73 billion, generating revenue of $1.06 billion, and net income of $128.73 million, with a profit margin of 12.1%. The company has a PE ratio of 14.01 and an EPS of $0.40. The stock offers no dividend yield. The fourth company on the list today is McKesson Corporation, with the ticker symbol MCK. This stock has also given a horizontal breakout, and I have pulled up the chart on the daily time frame. Looking at the chart, you can clearly see that the stock made a high of around $632 back in August 2024. Since then, it attempted to break through this level once in November 2024, but was unsuccessful. However, very recently, on February 28th, the stock finally broke out and has been trading above this level since then. What's interesting here is that there's visible consolidation happening above the breakout level, which is generally a good sign, especially when the broader market is in a downtrend. If we analyze the previous dip after the stock made its high, it had fallen by approximately 26%. Now, if we take the same percentage and project it upward from the breakout level, it points toward the $800 mark. This is not a target, just an observation, as some traders use this method to estimate potential price movement. Another strong technical sign is that the stock is trading above both its 50-day and 200-day exponential moving averages, reinforcing the bullish structure. So this is another stock to keep on your watch list and see whether the breakout level holds or if it loses momentum in the coming sessions. MCK operates in the healthcare sector, providing pharmaceutical distribution and healthcare solutions across the US, Canada, and Europe. It serves markets through US pharmaceutical, RxTS, medical surgical solutions, and international segments. Founded in 1833 by John McKesson and Charles Olcott, the company is headquartered in Irving, Texas. It has a market cap of $81.52 billion, generating revenue of $344.58 billion and net income of $2.83 billion, with a profit margin of 0.82%. The company has a PE ratio of 29.81 and an EPS of $21.82. The stock offers a dividend yield of 0.42%. All right, before we move to the last stock for the day, I have a small request. If you're enjoying the video, please give it a like and drop a comment below. This really helps with the YouTube algorithm. Just to give you an idea of how it works, when a creator posts a video, it's first shown to subscribers, and based on their engagement, likes, comments, and watch time, YouTube decides whether to push it to more viewers. So if you found value in this video so far, a simple thumbs up and a quick comment can go a long way in supporting the channel's growth. Now, moving on to the last stock for today, we have Weis Markets Inc., ticker symbol WMK. The structure here is very similar to what we've already discussed, so I'll keep this one brief. The chart is on the daily time frame, and you can see that the stock had previously made a high of $76 back in July 2024. After roughly 8 months of consolidation, it finally gave a breakout on March 6th and rallied up to $83. Since then, the stock has pulled back to its breakout level, and we can see two green candles forming from this level, indicating a possible breakout and retest pattern. If this level holds, we could see further upside momentum, but if it fails, then it would be considered a false breakout. So keep this stock on your watch list and see how it plays out in the coming sessions. That wraps up the 5 stocks for today. I hope you found this video helpful. I'll catch you in the next one. Until then, happy trading, and I wish you and your loved ones a peaceful and healthy life.